Hey everyone, how's it going? Today we're going to be going over some of the stock market stuff. I say stock market, but I tend to focus a lot on pretty much the dollar and gold when I do these videos, just because I feel like there's more frequent updates on them rather than S&P 500 and the Nasdaq. Like on the Nasdaq and S&P 500, we've been waiting for the same levels for quite a while, but gold. Let's just go over gold quickly. So for the longest time, we've been waiting for just another sweep of the highs from this triple top. And just to quickly recap why we were even looking for this. Number one is just if you're someone who's trading long term and you're looking to trade a triple top, this is not where people would you know look for a swing failure pattern or to get stopped out of their positions. It's just the average person is not stopped out of their trade and they are not going long on the breakout here. There is no breakout because there just wasn't a deep enough move up above the high for people to say, okay, this is an official breakout. I'm closing my shorts. I'm stopped out of my shorts and I'm going to go long. That just did not happen on any of these highs. This is just a classic triple top. People can short here, people can short here, and they were fine. Now, on the other hand, we've gotten a pretty substantial move up. We've gone above $2,100 on gold. So we've taken out that source of liquidity. And I don't think anyone really was safe from this move up. I mean, like, how much of a percentage was this above these highs? That was about 3.6%. So that's more reasonable to consider a proper stop hunt on these highs than something like this over here. And the count, I guess, which to be honest, so with that being said, I wanted to also just I think I was trying to go over how any, I guess, arguments against this count. And number one being is that, I mean, if we go down to the local, I mean, I keep saying local time frame, it's not really local, but a wave 5 cannot really be corrective. And this looks like an A and a B and then a C, which can be seen as, just completely invalid. However, I guess another way of counting it is some sort of A, or I mean, sorry, not A, but like an A and then a B and then, or a 1 and a 2, but that doesn't really count either, like doing it as a 1 and a 2, or maybe like an A and a B and then a C move after. Because right now, if we look at it over here, this is looking more like a 3-wave move up, A, B, and a C, to form this pattern, because there is no clear 5 waves at the moment over here. So I think there's a lot of, I guess, small issues with this count. However, the main idea, count aside, elliott wave aside, like I'm gonna just remove this. Either way, it's still a major liquidity grab on gold with a pretty nasty rejection happening as we speak now. There is a few things that I would like to see. If you have not gone short, or if you have not taken profits on any longs that you might have because you wanted to wait for weakness and this was a bit too quick for your liking, then I want to direct your attention to the monthly chart, because realistically, I would not really say that if you're looking for a super high time frame trade, you do not have to really rush into anything until this monthly candle closes and you get a new monthly candle opening. So if, let's say, we just keep ranging within this zone here, between 1960 to 2080, or whatever this region of price is, if we just keep ranging for the next month, and then a new monthly candle opens below this previous triple top, then you could look for some sort of retracement for a short, before, or not necessarily for a short, but you can say, okay, this is a major sign of weakness. And now that we've closed the monthly candle below this area, I'm going to take profits on my gold trades that I had longed and see if we get a potential swing high on the monthly candle. So that is one way to look at it without being, I guess, too hasty with your decisions. If you want to be on the monthly chart, if you want to be, a little bit, I guess, quick with it, you can simply wait for, let's go down to the lower time frame and see what we have. Now, I would generally advise the monthly idea first. That's my take. We could simply just come up again and retest this high. Take out these range highs over here. Take out this entire imbalance zone over here. I mean, if you look down, we've had a pretty clear 1, 2, 3, 4, 5. So we've had an impulse move down, and now it makes sense if we have like a little bit of a correction where we could potentially just come up and either simply take out this area of liquidity, or come up to the range highs, take out this area of liquidity up here, these equal highs with the imbalances. That's to be decided. However, I suppose the safest trade would have to be the range highs again if we come up and take them out. But that's the safest trade, I guess, on the local time frame. The safest trade overall is going to be looking at the monthly chart close. So that's what I would first recommend before looking at another take on the range highs. So, and again, just to recap, I would be looking for another move down to take out these lows over here. If we get a proper rejection on the monthly candle, like I mentioned, I would be looking to target these lows again down here at $1,600. And if I had to, let's say for example, the monthly chart closed and we got another move up to the range highs, it would look like this. And then you can put your stop loss at the pivotal high, like so. Again, monthly close, January rolls in, range high, and then move down. If we keep moving up before the monthly candle closes, this is not, I wouldn't really be emphasizing on this trade. We could go up and take out the high once again. It's very possible if we do this before the monthly candle closes. So keep that in mind. Anyways, beside gold, the dollar, I mentioned, what was this level? It was the monthly candle over here. And I mentioned that, this would have to be the last major point of support on the dollar before, potentially making a new low. And so far we are bouncing off of this. Now, a quick little tip for anyone who's wondering, instead of drawing a rectangle tool and then going over to your fib and then doing the fib and putting the 0.5, you can simply just, on the rectangle tool, just enable the middle line. You can see here the difference, and it'll just act as a 0.5 tool automatically. So probably a lot of you already knew this, but I'm just a little bit slow. And there you go. Now, if anyone has been trading the dollar and you have taken this trade, then just be wary that we still have this imbalance and swing high that we could potentially fill and then retrace off of. So any take profits should happen around this high over here. So I would say this zone in general is a pretty reasonable place to start taking profits. So yeah, and if we break above this area, if we break above $105 and hold above, then we can simply just keep moving up and up and up. But a reasonable take profit zone, if you did trade this, would be up here at this imbalance / fair value gap area. If we reject off of it, then I am of course looking for another low. However, if we hold above this area of resistance, then I would be pretty much looking for all the way up to, well, all the way up to taking out this high over here, $114. Pretty simply. I don't think I would be looking for another short opportunity if we break above this swing high, because that would be a major sign of strength if we get above this swing high over here. The sign of weakness is holding below. So keep that in mind if you have taken this trade and you're looking for reasonable take profit zones. If you want to also use this as a reference point for any potential crypto trades or stock market trades, then be my guest. But I've mentioned multiple times that the correlation isn't as strong, I think, at the moment. So because, I mean, dollar has been bouncing off support, Bitcoin has been going up immensely. So yeah, anyways, moving on. Although I don't have anything major to mention on the S&P 500 and the NASDAQ, I did have a previous, I guess, trading idea on the NASDAQ where it looked like this that I should be going over. We have a gap now, which looks like I'm just going to go over these time frames really quickly. Just to see if I'm missing anything. $1,500 monthly. Yeah, okay. I mentioned this on, I can't remember if it was last stream or a couple of streams ago, that generally speaking, first of all, this is a very strong candle with a swing low. Second of all, we are very, 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 very close to taking out these highs. So this is still a bias for me that I'm essentially looking for a take of this high. And if that's the case, then the main question on people's minds is, okay, if we're looking for this high, where is the potential retracement area for a long? Well, aggressively, I'd imagine some people were simply looking at this gap. But alternatively, we could wait for this down close area for us to move down into this area here. I wouldn't really be looking too far down, if I'm being honest, because if we retrace all the way down to below this gap, then I don't see why we won't just keep going further to take out this low. It's just like we've lost too much support at this point. So yeah, I would have to say I need to see some fibs. I need to see if there's anything. Discount. So if you want to wait for the discount zone to get hit first, and you can say to yourself, okay, I'm not going to enter any trades until we get into discount territory. So we can simply just keep that on. Keep this on and the one. And you can say to yourself, it's simple as this. I will only buy in discount territory and no more, no less. I want to also quickly see where weekly. We have this fair value gap down here or imbalance area that hasn't been filled. I think something like this, and then, well, you could do two things. You could either like just immediately buy on discount, or you could wait for the safer idea, which is $1,500 stop losses. And that would be your trade. Yeah, I'm happy with that. If you wait for something like this to roll around, potentially coming down January and then coming up for the new year to make a new all-time high. I'm not saying that there's a short to be taken here, or if there's any sign of weakness. I don't think so. This fib is going to be very dependent on where we stop, of course. So if we just keep moving up higher, then Obviously, if we take out this high, then I don't see a reason to long here anymore because our magnet is now gone. The only thing that I see as a magnet is simply just these highs. So if we take out this high first and then move down, this is no longer in play. This is only in play as a retracement to get to this magnet point. So I hope that clarifies things. That's all I really have to say. Just, I guess, an update on the last time I gave this. VIX, still waiting. Still nothing. I'm not going to speak a lot about that. Just saying still waiting for lower prices. The S&P 500, pretty much the same as the NASDAQ. Just look at this. Like high, 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 hello. Triple top, essentially. And I don't see a reason why we just die here. Like, I think the most reasonable idea is that we're going to come up and take out these highs and then potentially another all-time high. But for now, the first thing is to just, take out these highs here. We have a pretty similar pattern on the S&P 500 like we did on the NASDAQ. If there's any clearer levels, I suppose, you can say looking for this like breaker. Yeah. It's pretty similar. I have to say it's pretty similar to the NASDAQ, so you don't have to, I guess, confuse yourself too much by trying to trade both. Just the bias is the same. Of course, NASDAQ's one is a little bit higher, but honestly, I don't see much resistance above here to justify a short, besides, just a liquidity grab. But I have to say, with the new yearly candle kicking in, it makes sense to just, top it off one more time. One more high, and then see from there what happens. So I wouldn't really sit here and try to trade both S&P 500 and NASDAQ. Just pick one and wait to see, if we come down to these support levels, like I mentioned. Potentially just because they're so similar, just look at the NASDAQ and go from there. Besides that, I'm trying to think of what else there is. I don't think I have anything else on the stock market. I think I'm very happy just covering these assets. But the Bitcoin chart, however, is pretty damn bullish on a lot of time frames, like the monthly. Like if you see a monthly candle like this, and if you see a weekly candle like this as well, then I don't see much of a reason to short at all. Like literally zero. I don't see much of a reason at all. We could go over the local time frames, I guess, but it's just not a good idea. It's really, really not a good idea. I'm gonna have to wait until next week's candle to see if there's anything there. But at the moment, like I mentioned in last week's stream on Bitcoin, I said let's just wait for 50K and go from there. But let's just do a quick little analysis, and I'm gonna explain this level that I have marked out here. And number one, if we do get any sort of retrace, then taking out the low of this weekly candle into 40K liquidity into this imbalance would be a pretty nice retracement point for anyone who wants to, I guess, jump in before another move higher. So obviously it's just the level to have marked. I know I initially had 34K, but the higher we go up, the higher price goes up. It's just the more coming down here will just be an overall sign of weakness. So if price was to retrace all the way down to 33K, it would just be like, a pretty devastating drop where we could just see a lot of resistances formed. And at that point, it's just, the long trade wouldn't really take us to a new high. It would just take us to the next resistance point. However, if we hold and maintain this level here, then we could say to ourselves, okay, well, it's simply a retracement point before going up and taking out the high once again. So ideally speaking, if we were to ever take out this area, it would have to be after some stalling. So, January or like, literally the very end of December to make sure we don't come towards these trend lines over here. But at the moment, I would have to say, like, have this marked. Don't keep shorting until we see some kind of higher time frame sign of weakness on the monthly or the weekly, such as a swing high or some sort of indecisive candle. As it stands, it's just a bullish move up. So better to wait for the retracement than to just keep jumping in front of this. So yeah, that's all I really have to say at the moment. I just feel like I have to input some Bitcoin, I guess, analysis at the end, just because there's so much going on right now with Bitcoin and Ethereum that it just makes sense to keep including these in the videos. So anyways, I'm not going to talk too much about Bitcoin right now because the levels are still the same, except for this new addition. But 50K is still the same, and amending the idea of 34K liquidity because it's just too deep of a retrace to be seen as something that, can be a bullish move up. At that point, it's just major sign of weakness coming down to 34K. So yeah, anyways, without wasting too much time, I hope this was a helpful stream. Again, if you have any questions at all about anything, feel free to share them in the chat, or if you have any sort of different perspectives, feel free to discuss it as well. So yeah, anyways, I hope you guys have a great day ahead, and I'll talk to you guys later. Bye-bye.